The financial system of the United States in 2026 operates as a wide and interconnected framework that manages how money is earned, transferred, saved, spent, and regulated across the country. It affects individuals, families, businesses, and communities on a daily basis. Understanding this system is important not to exploit it, but to navigate it responsibly, ethically, and with full awareness. In the USA, money primarily exists in digital form. Salaries are paid electronically. Bills are settled through online platforms, and purchases are completed using cards or mobile payment systems. Physical cash still exists, but its role has become limited. Despite these technological changes, money itself remains a neutral tool. Its moral value depends entirely on how it is earned and used. Ethical income comes from lawful work, honest trade, and value creation, not from deception, exploitation, or unclear arrangements. Most people in the United States earn money by providing services, working for companies, running small businesses, or offering skills through independent work. By 2026, digital services, remote work, and skill-based income have become even more common. People are rewarded for productivity, expertise, and problem-solving. When work is done honestly and contracts are clear, income remains lawful and dignified. Once income is earned, individuals must decide how to manage it. Spending is a major part of the financial system as consumer demand drives businesses and employment. American households typically spend money on housing, food, transportation, healthcare, education, communication, and basic lifestyle needs. In recent years, people have become more cautious due to rising living costs and economic uncertainty. This has increased awareness around budgeting, prioritizing necessities, and avoiding unnecessary expenses. Moderation in spending is not only financially wise but also ethically encouraged. Saving money is another essential behavior within the U.S. financial system. People save to protect themselves from emergencies, prepare for future responsibilities, support their families, and maintain stability during uncertain times. Saving is not about hoarding wealth, but about safeguarding it. In 2026, many people keep savings in secure accounts or digital platforms simply as storage, not as a means of generating income. From a halal viewpoint, saving for protection and planning is permissible and responsible. Budgeting plays a central role in personal finance. It helps individuals understand how much they earn, where their money goes, and how much remains available. Without a budget, people often lose control of their finances and become vulnerable to stress and poor decisions. By 2026, budgeting tools are widely available, but the principle remains simple: spending less than or equal to what one earns. Financial discipline protects families and supports long-term stability. Businesses are a key pillar of the American financial system. They create employment, provide goods and services, and contribute to economic growth. Small and medium-sized businesses are especially important, as they support local communities and innovation. Ethical businesses focus on transparency, fair pricing, truthful marketing, and customer satisfaction. The real economy is the foundation of financial activity. It includes tangible and productive sectors such as manufacturing, agriculture, transportation, construction, healthcare, education, and technology services. In 2026, the U.S. economy is largely service-based, but it still relies on physical production and logistics. Halal financial thinking prioritizes real economic activity over artificial or purely speculative transactions. Wealth should grow through actual contribution, not manipulation. Technology has reshaped how financial transactions occur. Digital payments, online banking, and mobile applications are now standard tools. These technologies are neutral by nature. Their permissibility depends on their use. When used for lawful transactions, transparent transfers, and legitimate business, they serve as helpful tools that increase efficiency and reduce friction in daily life. However, they also require awareness, as financial mistakes can happen quickly in a digital environment. The government plays an important role in the financial system. It collects taxes, funds public services, regulates markets, and enforces consumer protections. Taxes support infrastructure, public safety, education, and social programs. While tax systems can be complex, compliance is a civic responsibility. Understanding how taxes affect income and spending is part of financial literacy and helps individuals plan responsibly. Inflation is another factor that shapes financial behavior. Inflation reduces purchasing power over time, meaning the same amount of money buys fewer goods and services. By 2026, inflation awareness has increased, and people pay closer attention to how prices affect their budgets. Inflation encourages careful planning, avoiding waste, and focusing on essential needs. From an ethical perspective, inflation is a system-level phenomenon rather than an individual moral issue, but awareness helps families protect their financial well-being. Financial education has become increasingly important. People who understand basic financial concepts are better equipped to manage income, avoid harmful decisions, and plan for the future. Financial literacy does not require complex knowledge. It begins with understanding income, expenses, savings, and responsibilities. Islam encourages seeking knowledge that protects wealth and prevents harm, making financial education a beneficial pursuit when approached ethically. Risk exists in all financial decisions. Responsible behavior involves avoiding unclear agreements, reading contracts carefully, and not chasing unrealistic outcomes. Long-term stability is built through patience, consistency, and lawful effort. Ethical finance emphasizes clarity, shared responsibility, and fairness between parties. These principles reduce conflict and protect all involved. Family and community play an important role in financial life. In the USA, financial decisions often affect spouses, children, and extended relatives. Supporting family needs, helping others when possible, and contributing positively to society are important values. Wealth is not seen as absolute ownership, but as a trust that carries responsibility. Using resources wisely benefits not only individuals, but also the wider community. The U.S. financial system in 2026 can be understood as a large network that facilitates work, trade, savings, and consumption. It connects people with opportunities and resources. Understanding the system does not mean accepting every aspect of it. Knowledge allows individuals to make informed, ethical choices and avoid harmful paths. With awareness, discipline, and moral guidance, people can navigate the system while maintaining integrity and financial stability. This foundational understanding prepares individuals to approach financial decisions with confidence, responsibility, and ethical clarity. In 2026, navigating the United States financial environment responsibly requires awareness, patience, and a clear ethical framework. Once a person understands how the system functions at a basic level, the next step is learning how to interact with it in a way that protects long-term stability without crossing moral boundaries. Financial success in this context is not defined by rapid growth or unrealistic outcomes, but by consistency, clarity, and lawful effort. One of the most important principles for individuals is asset-based thinking. Asset-based thinking means focusing on things that have real value and practical use. This includes lawful businesses, productive skills, physical goods, intellectual work, and services that solve real problems. Wealth built through assets is tied to the real economy and benefits others, making it ethically sound. This approach contrasts with chasing outcomes that are detached from real production or rely on uncertainty. Skill development plays a major role in financial stability. In the USA, people who continuously improve their skills are better positioned to earn income regardless of economic conditions. Skills in technology, communication, education, design, logistics, healthcare support, and ethical business management remain in demand. Earning through skill is one of the cleanest and most sustainable forms of income, as it is directly connected to effort and value creation. Another important element is financial planning. Planning does not mean predicting the future with certainty, but preparing for different possibilities. Responsible planning includes maintaining emergency reserves, managing regular expenses, and avoiding commitments that exceed one's capacity. Planning reduces stress and protects families from sudden financial pressure. It also aligns with the Islamic concept of taking precautions while placing trust in outcomes. Avoiding common financial traps is essential. Many people fall into difficulty not because of low income, but because of poor decisions. Overspending, unclear agreements, and emotional decision-making are frequent causes of financial strain. In 2026, constant exposure to marketing and digital promotions makes discipline even more important. Ethical financial behavior requires patience and the ability to delay gratification. Debt management is another area that requires careful attention. While certain obligations may be unavoidable in modern systems, minimizing financial burden and avoiding harmful structures protects long-term stability. Responsible individuals focus on reducing liabilities, living within their means, and prioritizing financial independence. Freedom from excessive obligations allows people to make better life choices and support others more effectively. Long-term stability also depends on mindset. A sustainable mindset focuses on gradual progress rather than sudden outcomes. Wealth built slowly through lawful effort is more stable and less stressful. It allows individuals to adapt to changes, support family needs, and contribute to society. Chasing rapid results often leads to disappointment and poor judgment. Community awareness strengthens financial resilience. In the USA, people who build strong networks, partnerships, and professional relationships often have greater access to opportunities. Cooperation, trust, and shared benefit create a healthier economic environment. Supporting ethical businesses and participating in lawful trade strengthens the broader economy. Another key factor is adaptability. The financial landscape continues to evolve due to technology, policy changes, and global influences. People who remain flexible, open to learning, and willing to adjust their strategies are better prepared for the future. Adaptability does not mean compromising values. It means applying the same ethical principles in new circumstances. Transparency and record-keeping are practical habits that support financial health. Keeping track of income, expenses, and agreements prevents misunderstandings and disputes. Clear documentation promotes trust and accountability. These practices are not only financially sound, but also ethically encouraged. Preparing for the future includes thinking about responsibilities beyond oneself. Family needs, education, healthcare, and community contribution all require planning. Financial awareness helps individuals fulfill these responsibilities without stress or dependency. Wealth, when managed responsibly, becomes a means of stability and service rather than anxiety. The U.S. financial system offers many lawful opportunities for those who approach it with knowledge and discipline. The key is not the system itself, but how individuals choose to interact with it. Ethical navigation requires understanding, patience, and commitment to lawful means. When people focus on real value, responsible planning, and moral clarity, they can achieve stability without compromising principles. By 2026, financial awareness is no longer optional. It is a necessary life skill. Those who learn, plan, and act responsibly are better positioned to protect their families, support their communities, and maintain dignity in an increasingly complex environment. This approach transforms finance from a source of stress into a tool for stability, balance, and long-term well-being.